Hello, candidates, and welcome to the Principles of Auditing learning session. The course is ATD. ATD is the course, Accounting Technicians Diploma. This is paper number 12, and this is our first session. Now, allow me to read the unit description. It reads, this unit covers the competencies required to perform auditing functions in an organization. The competencies include applying auditing concepts in the conduct of an audit, planning for an audit, managing the various risks, errors, and frauds that an organization might face, testing the internal control systems of an organization, gathering audit evidence, applying computer-assisted audit techniques to carry out an audit, and demonstration of understanding of the audit report. The learning outcomes are as follows. Number 1 is to identify foundational concepts in audit. Number 2, plan for an audit. Number 3, detect risks, errors, and frauds in an organization. Number 4, gather audit evidence. 5, apply computer-assisted audit techniques to carry out an audit. And lastly, demonstrate an understanding of audit report. This subject is organized into 6 chapters. The first one being identifying foundational concepts in audit. Number 2, plan for an audit. 3, detect errors, risks, and frauds in an organization. Number 4, gathering audit evidence. 5, applying computer-assisted audit techniques to carry out an audit. Then number 6, demonstrating understanding of the audit report. Now, in this lesson, we're going to define the key terms in audit. That is auditing. We define in this lesson what an audit is, what auditing is, and auditor. So our today's lesson focuses on those 3 key terms: auditing, auditor, and an audit. So in this lesson, we are going to define auditing. What is auditing? Definition of key terms of 1. Auditing. What is the meaning of auditing? Now, auditing is a process of independently examining financial information of an entity, whether it is a profit-oriented or not, irrespective of the size or the legal form. And when such an organization is conducted with the view of expressing an opinion thereon, then we say that is an audit. So auditing, first of all, is a process of independently examining financial information. It's a process independently examining the financial information of an entity. It is a process of independently examining the financial information of an entity, okay, with the view to expressing an opinion as to whether the records they portray a true. It is an independent process of examining the financial information of an entity with a view of expressing an opinion as to whether they portray a true or fair view. In other words, auditing involves a systematic and objective examination of an entity's or an organization's financial information or statements, records, and operations to determine whether they are presented fairly and accurately in accordance with the generally accepted accounting principles or other applicable financial reporting framework. Examination is to establish whether these financial records or statements are presented in accordance with the generally accepted accounting principles. You understand, candidates? So that is to mean, candidates, that an organization, we all know by now, or organizations are owned by members or shareholders. Let me use this page. Members form an organization for various objectives. We may have now shareholders. The shareholders, the owners of a company, they form a company to create wealth and so on. The objective of forming a company sometimes is just to create wealth. So these shareholders who form an organization may not have the time to run the organization, to manage it. That's why they appoint managers. We may have board of directors, the board. So the shareholders delegate the authority to the board of directors to run the affairs of the company on their behalf. And this board may appoint the chief executive and the employees. So down here we have the management, the one that oversees the day-to-day operations. So what happens, candidates, is that these shareholders, they appoint auditors to examine the financial statements that are prepared by the management. And the work of the auditor or auditors is to independently examine the financial information that is presented by management. And the purpose for examining these financial statements is to establish or to find out or to express an opinion as to whether these financial statements portray a true or fair view, or whether these financial statements are accurately presented in line with the generally accepted accounting principles. Because when the management prepares the financial statements, these financial statements are required to be prepared in accordance with a reporting framework, financial reporting framework. It could be the International Financial Reporting Standards, could be the International Accounting Standards, or any other generally accepted accounting principles. So the auditors who are independent, these auditors are independent because they are appointed by the shareholders. To the shareholders that appoint these auditors, the auditors report to the shareholders. They examine these financial statements, then make an opinion in an audit report, which is presented to the shareholders. So they are independent to the extent that they are appointed by the auditors and they can only be fired by the auditors. They are independent of management. They cannot be influenced by management in any way because they are hired by the shareholders. So if you're running a company or you have a group of people are running a company, the shareholders, and you don't have time to manage the company, you may want to know the management team that is in place, because the management represents the shareholders. They are required to act in the best interest of the shareholders. They run the affairs of the company on behalf of the shareholders. This management, in other words, are agents of the shareholders. But these shareholders ought to have the assurance that the management is carrying out their mandate as required. And the only way to be sure is to hire professionals. And auditors are professionals. They hire professionals who may have skills that they don't have. So these auditors examine the financial information of the organization. Then they express an independent opinion as to whether the management has prepared the financial statements in line with the generally accepted accounting principles. So the primary objective is to provide assurance to the shareholders that the financial information is reliable and is free from material misstatements. So the auditors examine the financial information on behalf of the shareholders, and they provide assurance. The primary objective is to provide assurance that the financial statements are accurately presented and they do not contain any material misstatement. So that is the meaning of auditing. It is a process of independently examining the financial information of an entity with a view of expressing an opinion as to whether the financial statements are presented accurately in line with the generally accounting principles. So that's the first key definition. Then number two, the second concept is auditor. An auditor. 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 Who is an auditor? Now, an auditor is a qualified and independent professional. An auditor is a qualified and independent professional. So an auditor, first of all, has to be qualified. Then an auditor has to be independent. So an auditor is a qualified and independent professional responsible for conducting an audit. Responsible conducting an audit. In other words, an auditor is a qualified and independent professional responsible for examining independently the financial information of an entity with a view of expressing an opinion. Right? Auditors possess expertise. They are qualified. They have skills. They have expertise. An auditor is one who has certain skills. An auditor possesses expertise in accounting principles, in auditing standards, in relevant laws and regulations, and so on. Because an auditor is required to examine financial statements like the balance sheet, the income statement, the cash flow statement, and so on. So an auditor has to have knowledge on how these financial statements are prepared, because financial statements generally are prepared in line with the international financial reporting standards, in line with the international accounting standards, in line with the generally accepted accounting principles, and so on. So for an auditor to express an opinion as to whether these financial statements are prepared accurately, then the auditor has to be an expert in all these standards, has to know the standards, has to understand the standards. He also is required to understand and know the international standards in auditing. International standards in auditing. So the auditor has to have knowledge of auditing standards, accounting standards, financial reporting standards, and so on. That's why we're saying here that is a qualified and independent professional, because he has possessed certain skills. The auditor has to have certain expertise, and their role is to gather and evaluate evidence in order to form an independent opinion, in order to form an objective opinion on the fairness and accuracy of financial statements or the effectiveness of internal controls. So auditors can be internal, they could also be external auditors. Internal auditors are employees of the organization that is being audited. So you may be employed as an internal auditor. You may also be an external auditor. External auditors are independent professionals hired by the organization. And external auditors, particularly those expressing an opinion on public company financial statements, must maintain strict independence from the client or the company that they are auditing. So auditors can be internal or external. But most importantly, when defining an auditor, you need to indicate that an auditor is a qualified and independent professional responsible for conducting an audit. So that is our second definition, an auditor. Then another foundational term is audit. An audit. What is an audit? Now, an audit refers to the specific engagement or undertaking carried out by an auditor. Specific engagement. An audit is a specific engagement or undertaking or assignment. Specific engagement or undertaking. An audit is a specific engagement or undertaking carried out by an auditor. Carried out is a specific engagement or undertaking carried out by an auditor. Carried out by an auditor. It is the practical application of the auditing process. It is the practical application of the auditing process. It is application of the audit process. It is the practical application of the audit process. An audit typically involves a series of procedures. So an audit will involve a series of procedures, beginning with planning. An audit involves planning. It involves risk assessment. An audit involves gathering of evidence. It involves designing and performing audit procedures. It involves forming an opinion and also reporting. So an audit is a process. It involves a series of procedures, including an audit includes procedures like planning, there is really out an audit, then there has to be an audit plan. There has to be an audit risk assessment. There ought to be designing and performing audit procedures. Designing, you have to design and perform audit procedures. Then there is a gathering of evidence, obtaining audit evidence, obtaining audit evidence. Then after audit evidence, there is forming an opinion. These are the major steps or procedures. Forming an opinion. So an audit refers to the specific engagement or undertaking, the practical application of the audit process, which begins with the planning. Planning. That means understanding the entity, understanding its environment, and also the risks of material misstatement. Then there is a risk assessment, assessing the risks associated with the audit, identifying and assessing inherent risks of material misstatements. Then there is also like the inherent risks, the control risks, and so on. After that, one has to design, first of all, to design and then perform the audit procedures, designing procedures, then performing the procedures. That includes the substantive procedures like the tests of detail, the analytical procedures, the tests of control, and so on. The auditor carries out these procedures in order to obtain evidence, to obtain audit evidence, gathering sufficient appropriate evidence to support the audit opinion. The auditor can only express an opinion after gathering evidence, because an opinion has to be based on evidence. So after obtaining audit evidence, then the auditor can form an opinion. Okay? The auditor evaluates the evidence obtained and then forms an opinion on the financial statements, after which the auditor then reports. There is now the audit report. This is the final step, audit report. This opinion is expressed in an audit report, issuing an audit report that communicates the auditor's opinion to the users of the financial statements. So that's an audit. That's the meaning of an audit. There are various stages in an audit. There are procedures, beginning with planning, risk assessment, designing and performing an audit procedures, obtaining audit evidence, forming an opinion, and then there is the audit report. And that will mark the end of today's lesson. In this lesson, we introduce a subject, then we have defined 3 key terms in auditing. 1, auditing; 2, auditor; 3, an audit. So we'll be learning more about auditing. Thank you for attending the lesson. Make sure you go through the lessons. If you have any questions, you are free to ask your questions. Below this video, there is a comment section where you can post your questions, and all your questions will be answered. Bye-bye.